Welcome back to The Big Picture. If you haven't done your taxes already,
shame on you.
You only got a few hours.
I mean, come on. Get your taxes done,
It
folks,
does. It happens.
right?
My parents are the people who file an extension every year.
Really?
They do.
Oh my gosh. Well,
Well,
I grew
they've
up
got
with an
business
accountant.
stuff
I was
to-
telling
yeah.
you.
Yeah, your
that
mom's an accountant,
My mom is
so-
like, get it done.
Yeah, no, my parents have the business, so they always like, it ends up in an
Yeah,
extension every
definitely.
year.
No big deal.
Yeah. But for the folks who are now waiting until today and they're going, oh no,
Panic mode.
I don't have time. They have to file the extension. What do they need to know?
Yeah.
So the first thing I would say is file something. Either file a return
gosh. Yeah.
or file an extension, because there are penalties for failing to file. It's like you failed to turn in your homework, we're giving you a 0 or an F. So turn something in. There's really a lot of people that have never filed an extension, they're intimidated by it. Clearly, they want to get it off their plate. They don't want to stress for months. Honestly, if you're kind of behind the 8 ball today, you can file an extension and you could literally file your return tomorrow.
And I think a lot of people think, oh, if I file an extension, that means I don't have to pay the IRS today. That is a big mistake. Talk to us about what you can do if you are not able to, come up with the cash to pay the IRS today, because it has to be today.
Yeah, that's a problem. It's not the end of the world, obviously, if what you owe is a smaller amount. The penalties and interest would be minimal. And generally, the IRS is more willing to waive interest than they are the penalties. This is one reason why, for our clients at Keeler and Adler Family Wealth, we do intra-year projections, tax projections, so they don't have a big surprise. The worst thing that can happen is the accountant or the TurboTax tells the client or filer that they have a $10,000 bill due to the IRS, and they don't know where they're going to get the money. So by doing an intra-year projection, you kind of know ahead of time, I'm going to have to come up with $10,000 by April 15th. So good point. An extension doesn't mean you have an extension to pay, so you still have to pay, and then you true up the difference between now and the time you file the final return.
And obviously, we know with the passage of what's been quoted as the One Big Beautiful Bill, that changed a lot when it comes to tax codes. What you need to know, who benefits from this? What are we seeing? Is from some of the work that you do as a financial advisor, how's that changing what people are looking at this year and into next year?
So yeah, the One Big Beautiful Bill Act was passed last year. You love or hate the name. The reality is, what we're finding is sort of the middle class are the people that are benefiting the most. And there's actually been some news stories on this, that a lot of middle income filers are seeing bigger refunds. There were two, I would say, pretty significant changes. One was an extension of the 2017 tax bill that extended the tax brackets. So you have a 12, a 22, 24, 32, 37. Obviously, what we try to do for our clients is do what we can to keep them in that 12 or 22 percent tax bracket. So that's a big one. And then the second really big one is increasing the SALT deduction. That's state and local income taxes from $10,000. That was the limit under the 2017 law. It's now $40,000. So that's property taxes, that's state and local income taxes and sales taxes. So that's a pretty big one. The standard deductions really weren't changed, but for folks that have high property taxes that were capped before, between your mortgage interest and your property taxes, you could have, say, $50,000 or $60,000 in itemized deductions.
And Colin, I know you talked about your parents being business owners and they like to file for their extension. For your clients, do you recommend, if they are business owners, that they file their taxes quarterly, pay that way? What do you recommend for that? Or do you like to advise them to do it just kind of all once a year?
Sure. It really depends. We have a lot of clients that we file quarterly returns for.
Okay.
And one thing I should mention, the IRS is phasing out paper checks.
Yeah.
So you really need to be paying electronically. So for folks that are paying quarterly, they set up an account, pay those taxes quarterly. This April 15th deadline, the IRS is allowing people to still file with a check. we have a lot of procrastinators, so some folks aren't familiar with how to do that. So they're giving some leeway on that. The one benefit of paying quarterly is it obviously breaks up the tax liability over 4 quarters. But in addition to that, if you fail to pay tax in the quarter in which the income was earned, the IRS is likely to charge you a penalty and interest. So to avoid that, you really want to stay on top of it.
And really, this time of year, and especially this close to the deadline, what are some of the biggest mistakes people are making? And I mean, avoiding them is, could be as easy as just being a little bit ahead of this. But up until today, what are some of the largest mistakes that we're seeing, especially with some of the changes this year?
So what I would say is, if someone is starting this year to file their own returns using TurboTax or another online system, the system doesn't necessarily know what documents you should have. So if you have 1099s from bank accounts, from investment accounts, not retirement accounts, it doesn't know what you have or don't have. So it's not uncommon for people to miss those things. And then if you're working with a CPA, the CPAs generally are more reactive than proactive. So you hand them a packet of materials and they input that data and spit out a return. If you've made charitable contributions, if you have paid an estimate, but you forget that you paid, or you failed to pay the estimate, if the CPA has that information wrong, the result on your tax return is going to be incorrect. And the IRS generally catches those mistakes about 2 years later. So 2 years from now, you get a nasty gram in the mail saying that you owe something because something was missed.
Right.
So again, it's one thing we do for our clients is not only do we do the intra-year tax projection, so there are no surprises, but we also offer to review the draft return before it's filed.
And also make sure you get that Social Security number in there correct, right?
Oh,
and
yeah,
then
that's a
your
big one.
routing and bank account number for that direct deposit.
Right. That's one of the biggest mistakes that people make when they file their own, is getting their
Absolutely.
banking account number. All right.
Thank
Andy
you so
Keeler,
much.
president of KN Family Wealth, joining us today talking about tax day tips. All right, Andy, thank you so much for coming in.
My pleasure.
Appreciate
Thank
it.
you.
We'll be right